Welcome, everybody. We're going to be a couple minutes while we wait for everybody to come on, but I thought I'd share a little ABBA music with you.
Hi, everyone. I have to laugh every time I hear the ABBA music. I can't help it. It's great. I love ABBA. It's just so funny.
Hey, Mike, it was out of that or the Bee Gees. I could have done the Bee Gees, a little disco music.
One of these days we'll have music that was made maybe in the last 10 years.
Yeah,
I'm
got to
just
get it.
kidding.
You got to get a different presenter to do that.
I'm surprised Willie Nelson isn't on the mix either.
I can put him on. I've got him on my playlist.
Oh, that's hilarious.
We'll just take another minute or so for everybody to come on. Looks like we've got a good group today. We'll start this in just maybe 30 seconds or so. Okay, I hope everybody enjoyed the ABBA music. Hi, everybody. Welcome to How to Invest in Self-Storage Real Estate, presented by Overland Capital. And my name's Ken Holman. I'll be your host today. We also have Mike Holman with us. He'll be the other presenter, and I'll introduce him in just a few minutes. Overland Capital is part of the Overland Group, which is a fully integrated real estate organization that's been around for about 30 years. I think we started in 1989. So the goal of Overland Capital is to provide investors with a better investing experience. And we believe a big part of that is helping individual investors, self-directed retirement account owners, and 1031 tax deferred exchange sellers invest in commercial real estate. We've all heard the phrase, invest in what you know, and commercial real estate is no different. The more you know, the better investor you'll be. So feel free to ask any questions throughout the presentation. We'll do our best to answer all the questions at the end. We found that works better if we just take all the questions right at the end. But for anyone who needs help locating the Q&A button, it's located at the bottom of your screen. And also, you'll find that after the presentation, we'll email a copy of this to you. But you can also view it on our website at overlandcapitalcorp.com, and then just click on the Education tab. Just a little bit about us. I'm president of the Overland Group. We've been in business, as I mentioned, for over 30 years. We've developed, constructed, and invested all types of commercial real estate, but we especially like self-storage projects. Let me turn it over to Mike for a minute to introduce himself and our topic for the day.
Thanks, Ken. I run the investments and finance divisions of Overland Group. I spend a significant amount of my time working with equity partners and lenders. I'm also a licensed CPA. So our topic is how to invest in self-storage real estate. The three main things we're going to discuss today are demand drivers for self-storage, trends in self-storage, and threats and opportunities in self-storage. One of the things I want to kind of point out as we get started here is a lot of the things that we talk about are things that we're actually using in our day-to-day business. So one of the, and I'll kind of go over some tips and break it all down at the end, but that's one thing I really want to point out and show you how vitally important things we talk about are when you're trying to invest. So, you know, everyone just get started. What is self-storage? Self-storage rents out and leases space to individuals and businesses. Most of you have probably at one time rented a self-storage unit. Most leases on self-storage are on a month-to-month basis. Some of the largest companies in the industry are Extra Space Storage and Public Storage. I'm sure you've seen them around. Currently, the self-storage industry has a market size of around $39 billion, with an estimated 60,000 facilities currently operating in the space. While those are large numbers, they are about a fifth the size of the apartment industry, which is around 176 billion, with an estimated 564,000 facilities currently operating. What that means is that this is still a largely untapped market. Self-storage facilities vary quite a bit in size, quality, and purpose. Some facilities were built ground up with the intention of self-storage, while others have been converted into self-storage. Converting warehouses and vacant big box retail stores into self-storage has gained popularity in the recent years. Facilities can be one story or multiple stories. Really, there are four main facility types in the self-storage industry. You got drive up, climate controlled, specialty, and flex or mixed use. Drive up has historically been the most common type of self-storage and is usually what everyone thinks of when they think of a self-storage. A bunch of rows of units that you can drive up to and unload or load your stuff in and out of your unit. Climate controlled has gained popularity recently and can be incorporated with drive-up facilities or as part of a multi-story facility.
Hey, Mike, I wanted to mention something about climate controlled.
Yeah.
When the word climate controlled is used, that goes beyond just temperature control. That also includes humidity control. And so a lot of our projects, we don't call them climate controlled if we're in an area that we're not trying to regulate humidity as well. We call them temperature controlled units, but they're used about the same, but there's a little bit different in terms of what's included and what isn't included in those.
Yeah, thanks for the clarification. Specialty facilities usually focus on a specific type of storage, such as boats and RVs or wine and art. Lastly, mix or flex use usually incorporates an office or warehouse as part of the overall facility usually to drive additional revenues. So self-storage is a relatively new industry. It emerged in the 1960s and since then has been one of the fastest growing sectors of commercial real estate. In the early stages of the industry, most facilities were owned and operated as mom and pop shops. But as the industry has gained traction, more institutional ownership has come into the market. While it's not the well-kept secret it once was, there is still ample opportunity for investors to score big returns on this almost recession-resistant industry. Let's start with some of the biggest threats to investing in self-storage. First off, and probably most important, is oversaturation. While this is very market dependent, more and more people are seeing the power of investing in self-storage, which has caused a dramatic increase in the overall number of facilities. With more and more markets becoming oversaturated with self-storage, it's extremely important to do your due diligence. In my opinion, there's going to be a decent number of people who are betting way too big on oversaturated markets. And I see this most commonly with new self-storage investors who they heard from a friend that self-storage is a great investment, and then they decide to buy or build a facility without doing any research or due diligence.
You know, I was going to say, when that happens, you'll find that it lengthens out the time it takes to hit stabilization. So you maybe want to add a little bit more time if you're in an oversaturated market to fill up.
Yeah, absolutely. Kind of on a side note here, I mean, we had this happen in one of our areas. So we have a facility and it's doing pretty well. It's had its ups and downs a little bit, but we had a couple of people build new facilities, and we went and talked to them and asked them what they were doing, and we're like, did you get a feasibility study? Did you do any research? And they're like, no, I mean, I always wanted to own a self-storage facility. They built it up. Well, one of those same people ended up coming to our facility and almost a little sheepishly and said, "Hey, have you been renting up?" We're like, "Yeah, I mean, it's been a little slower. It was the winter, but we've been renting up." And he proceeded to tell us that he hadn't rented a unit in over 90 days. I, I was flabbergasted. That's as far as self storage goes. Unless you're 100% full and no one leaves, not renting a unit in over 90 days is disastrous. So do your research. Do your research. I'm going to repeat that 100 times throughout this. Okay, moving on. So number 2 is going to be the misconception of operations. Most people who find out that we invest heavily in self-storage often tell me something like, "Oh, that's a great idea. I mean, it's basically a parking lot with some metal buildings on it. So essentially it's a hands-off investment." People who say that to me quickly show me their ignorance of the industry. We'll get into this more later, but self-storage operations are a big deal and much more involved than most people think. Lastly, it's currently a seller's market right now. Cap rates are at all-time lows in the self-storage industry, so it's been harder and harder to find deals that make sense to invest in. Now, on the flip side, onto the opportunities that exist through investing in self-storage. So the first one is a fragmented market. What this means is that while the industry has gotten more institutional in the recent years, the majority of facilities are still owned and operated as mom and pop shops. This leads to a lot of opportunities as mom and pop facilities are usually not prone to extensive market research on rents or obsessed with operational efficiencies. Number 2 is high cash flow. When a facility is filled up and stabilized, it can be an amazing cash cow investment. Self-storage facilities are known to throw off cash returns in the 8 to 11% quite regularly. And please note, that's just cash. I mean, a lot of times when you end up getting to your overall return, which includes your appreciation, your debt pay down, everything, you're usually in that 18 to 20+% range, especially on new development. So the last thing is recession resistant. I mean, we'll get into this more later, but most experts agree that self-storage is one of the most recession-resistant commercial real estate industries in the market. So I mentioned this before, but it's so important, I want to repeat myself here for 30 seconds. Self-storage is one of the 3 asset classes that are essentially operating businesses and real estate businesses put together. The other 2 asset classes are hotels and senior housing. This means that the operations of the facility are vital to the success of the investment. So having a quality operator is a must. The biggest operators out there are Public Storage, Extra Space Storage, and CubeSmart. That being said, the price you pay for an operator is usually directly tied to how large the operator is. The larger the operator, the more you pay for that operator. In our experience, bigger does not always mean better, but whatever the operator you choose, just make sure you've done your homework to select a quality one. Self-storage has proven time and time again that the industry can succeed in both economic upturns and downturns. People seem to continually find new and creative ways to use self-storage. During an economic upturn, you might see people use facilities as product warehousing for small businesses or equipment storage for larger businesses. In an economic downturn, people are usually downsizing into smaller homes and storing household items such as furniture or art into a self-storage unit. In general, most experts agree that self-storage is one of the rare industries that are fairly recession resistant due to the flexibility of the product being offered. Let me turn it over to Ken.
Thanks, Mike. Self-storage facilities are really impacted by the residential population in the area. That shouldn't be a surprise to anybody. But I can hardly say enough about strategic location. We locate our projects on major roads where there's more than 10,000 cars a day passing the site. And we've learned that 10,000 car a day minimum threshold is not only important, but it's the right kind of cars that are coming there. If it's residential traffic, that's great. If it turns out to be the same people going to the same businesses every day, it's less effective. But the closer we can locate our properties to a densely populated area, the better they seem to perform. And the number of rooftops is really a major demand driver. We discovered that consumer habits also impact demand. Uh, with the increased cost of housing, homes are getting smaller, and with less square footage, they seem to have less ability to store things at their residence. So, but they haven't seemed to slow down on what they're buying. They just seem to keep buying more stuff. So used to be that the demand requirement was one self-storage unit for about every 15 homes in the area. And today it's one storage unit for about every 6 to 7 homes in the area. Another demand driver is transitional housing. During the Great Depression from 2008 to 2012, a lot of people lost their homes and needed to find places to store their stuff while they looked for alternative housing and new jobs. There's less demand for that today, but now we're seeing manufacturing coming back and companies advertising for new employees, and that means higher demand for storage. Also, we've noticed that with the millennials coming into the market, uh, that's given a lot younger generation of and more transient people that are coming in that have also helped facilitate additional storage demand. Some of the trends we're seeing in self-storage development is a need for more flexibility in our storage projects in particular. Uh, you can't just say you've got the same unit mix in every market that you're in. You really need to understand the market that you're in and tailor the unit mix for that development to the market. But customers are using the space in novel ways. For instance, we're seeing small businesses use space for warehousing, and we're seeing reps for different companies want to use the space to store their products, like pharmaceutical reps will store drugs and other products they sell to doctors and hospitals, and clothing reps will have a clothing line they don't want to transport back and forth to their headquarters, so they'll store their product line in a storage unit. So just like other types of commercial real estate, it's difficult to overstate the importance of location. Everybody's heard the phrase location, location, location. It's almost overused, but it's really critical in self-storage. Cities tend to want to force self-storage into industrial zones, but that doesn't make them very conducive to a good marketing program. We have one project that's located in an industrial zone, and that project requires significantly more online and offline marketing than another project we have, which is located in a more residential area. And the one that's located in the residential area requires much less advertising and has a much higher percentage of renters that come from drive-by traffic. And today we're seeing much more technology than older properties generally have. We have cameras located everywhere on the property with HD TV recording everything. The locks on each unit are tamper-proof, and the management software is pretty sophisticated. It identifies and records every person that enters the property and every time they open or shut their unit. We even have some properties that, the old program used to be you always had an on-site apartment on the facility, and now we have some properties that don't have anyone living on site. The quality of design has also changed dramatically. The closer the project is located to an urban neighborhood, the more design quality we're required to have in the project. Planning commissions, planning staff are really demanding that from us, and rightly so. And that happens mainly in infill sites. We've got one in Mesa that this project you're seeing on the screen is our Mesa project we're doing, which is kind of an infill urban location. And we're seeing these 2 and 3 story projects that don't even look like traditional self-storage designs. And another design trend that relates to a number of the temperature controlled units is that the unit mix seems to be changing with these multi-story projects. So let me turn it over, Mike.
Oh, thanks. So if you've looked at other financials in the real estate world, self-storage projections shouldn't look completely foreign to you, but there are some nuances that deserve some attention. First off, the main driving factor in a self-storage facility is net rentable square feet, or NRSF for short. Most storage financials measure the net rentable square feet as a way to track expected revenue for the facility. Another common term you'll see when perusing self-storage financials is the blended rate. The blended rate is simply the average rate of all units and is usually shown on a per square foot basis. One of the other important things to hone in on when analyzing self-storage financials is the cap rate used. Cap rate stands for capitalization rate, and if you need a refresher on what that is, check out our previous webinar at the Beginner's Guide to Real Estate Investing. But while self-storage cap rates are good, they are generally higher than, say, multifamily cap rates. They also vary quite a bit depending on the market. And so in suburban areas for a Class A facility, you can generally expect to see cap rates in that 6 to maybe 7.5% range, while in an urban area, the same facility would probably have a cap rate in the 5 to 6.5% range. Pay special attention to the cap rate being used on an investment, as this number has a major effect on the estimated returns of that investment. So far, we've given you much of the same information we use when choosing a self-storage investment. But at this point, I'm going to break everything we've talked about down to 3 simple keys. Understand that these are the same things all of the self-storage experts are doing to determine their self-storage investments. First off, focus on the demand drivers. Ken went through those, and this is vitally important. Self-storage is so operationally focused that you need to make sure you're buying or building a facility in the right area. The same self-storage facility in 2 different locations can produce extremely different financial results. Focusing on the demand drivers helps set up your investment for success, whether in an economic boom or an economic downturn.
You know, and Mike, you mentioned a little earlier the importance of a feasibility study. That probably can't be overstated. That really helps you determine population, rental vacancy rates, house price indexes, and other things like that. Those are all included in a feasibility study.
Yeah, exactly. And that actually leads in perfectly to what I was going to say next. So in the self-storage industry, there's actually self-storage experts that focus their trade exclusively on the industry. For example, there are real estate agents that have entire teams that do nothing but look at real estate deals. Other people, as Ken was just mentioning, do self-storage feasibility studies that can greatly help you focus on those demand drivers because that's what they're looking at and focusing on. It really helps you focus on the demand drivers as well. Utilizing self-storage experts help you to avoid a bad investment, first off, and number 2, it helps you to maximize a current investment. Next, understand the investment, understand the investment, understand the investment. And in case you didn't hear what I just said, understand the investment. Don't invest in something you don't understand or that you have a myriad of unanswered questions about. Self-storage is simple enough that experts or whoever you're investing with should be able to explain things to you. But it's just complicated enough that it's easy to get confused along the investing path.
Now, let me understand, Mike. Are you trying to say that we should understand the investment?
Yes, understand the investment. I'm banging my hands on my desk right now saying, understand. I have too many people that invest in things they don't understand because it's a hot thing or they heard about it. And that's really the point of, I mean, I'm going on a tangent here, so you're going to have to forgive me. I'm going to go on my soapbox for 30 seconds. I have way too many investors that come to me, they want to invest in stuff, and I can tell they don't know what they're doing, right? And luckily they're going with an expert, and we never lead anyone astray, right? So we do our best to treat everyone right. But I get so nervous about those investors because I know they got to have investments with other people and other groups that might not understand what they're doing as much. And that is just so risky. So yes, Ken, understand the investment. So you'll notice that all three of the tips that I just talked about are very interconnected. It's because following one tip helps facilitate following another tip, and so on. While nothing is guaranteed in self-storage investing, following these three tips, they will lead you to a much higher success rate than if you just wing it. So let's go down the path here a little bit. You've made your self-storage investment using the three tips we just talked about. You found a quality operator and are now ready to exit the investment. What are your options? It's important to understand that the self-storage market is a much smaller market than other asset classes. Therefore, I definitely recommend using a quality self-storage professional in helping you through the exit process. In general, there's two main buyers in the self-storage market. REITs, and those are groups such as Extra Space Storage, which we've talked a lot about, CubeSmart, Public Storage, etc. There's also some that aren't operators, but in general, those are the largest REITs in self-storage industry. The other group is individuals or smaller companies. REITs are great, but they are notorious for lowball offers, especially on your first offer or two. So if you decide to try and sell to a REIT, I always recommend having your numbers locked down. If you rely on them to tell you what your facility is worth, you're essentially guaranteeing that you're selling that facility at a discount. Individuals and smaller companies are a great option, but they are less convenient than going to one of the REITs. Lastly, one of the common exit strategies in self-storage is to do a portfolio sell. So what this means is that you have 2, 3, or more self-storage investments that you sell all together. And this is really a great option because it can attract more institutional buyers, which are usually willing to pay for solid performing real estate assets. Let me go ahead and turn it over to Ken for just a second.
Well, so Mike, you made a good point. And this is true with most real estate investments. You make a lot of your money going in when you buy. So you have to buy right, and then you have to make sure you sell right. But at the risk of quoting myself to be the industry expert, I thought I'd just wrap it up with a quote that I created that I thought kind of sums up what our investment strategy is. With solid demand through steady household growth, strong residential rental market, and record small business development, the self-storage industry is poised for a bright future. As a result, revenues are forecast to continue to rise while cap rates will continue to fall. And that means higher values for these types of investments. Just do your homework. Now let me turn it over to Mike to kind of take it home.
Thanks, Ken. Well, that's it, folks. So please make sure you take the poll that pops up on your screens, as this helps us to get to know you better. We're also going to go ahead here and get the Q&A started as well. So let me go ahead and open that up. So Henry asked, what is a good company for feasibility study for self-storage? Henry, this is a great question. And there's a lot of, there's really a lot of options out there. We definitely have a few that we like. One of the common ones that we use is Development Services Inc. It's Jo Beth White. She's really great. If you want to go ahead and email us at the investors at Overland Corp, there's some other ones that we use. that I don't have off the top of my head. But Development Services Inc. and Jo Beth White is excellent. She's been in the industry for forever, and we use her a lot.
Let me add another comment here too, Mike. You'll find that there are local storage management companies that will perform feasibility studies, but we have found that the national firms tend to be way more reliable than some of the local investment companies, which you'd think is just would be opposite from the truth. But that's kind of the way it works with them, because they tend to have a bias for wanting to manage your property. So they give you a good report, and it may or may not be exactly the gospel that you're looking for. So
Perfect, thanks. So Lawrence, what cap rate do you consider good to above average in this market? I'm in Southwest Florida. Okay, Lawrence, full disclosure, we are not in Southwest Florida currently on our cap rates or with our self-storage facilities. So the cap rates that we kind of told you generally earlier in the presentation might be a good benchmark. The best way to get this information, in my opinion, is usually in every market there will be a self-storage real estate agent. If you go with one of the larger firms, Marcus and Millichap, CBRE, something like that, they have extensive information on cap rates. So that's a really great place. That's one of the places we've turned to in the past to get our cap rates. Also, feasibility studies. Those are really the two places that we've gone to figure out cap rates for each individual market. So I would definitely recommend starting there. Ken, do you have anything to add to that?
Well, first of all, Lawrence, I was in South Florida just 2 days ago, enjoying a little sun and sand.
Yeah, and we're all of us here, all the rest of us that were left in the cold, we're very jealous.
But most commercial real estate professionals have access to CoStar. And CoStar, as many of you know, is a national organization where most commercial real estate brokers list their properties. And you can get a lot of really good, valuable information. You can see what projects are on the market. You can determine what the cap rates are that they're charging. That gives you a good general approach to what cap rates are in the market there.
Perfect. Thanks, Ken. Next question from anonymous attendee. I always love the anonymous ones. There's no such thing as a stupid question here, people. You don't have to be scared. No, I'm just kidding. You can do anonymous. That's fine. So, how do basements in the Utah market affect the self-storage market in general? Ken, you want to answer that one?
Yeah. I think it has an impact on the market because there are a lot of areas in Salt Lake, and especially East Side and the South Salt Lake market, where you're able to build basements. A lot of them on the newer homes have unfinished basements. That would have an impact on reducing the number of units that you can put in a market compared to some other areas. You go into areas like Farmington and the West Side, you get into areas where there are higher water tables, and those areas you can't build basements. So it just depends on your area how that would impact it. But yes, a basement would have an impact on the amount of storage that the supply of storage that you should have in that market.
Okay, next question. What is the average annual return on a storage unit investment? Great question. So I'll go ahead and take this one. It really depends on a couple of different things, but I'll try and give you enough information to answer your question. So if you're buying just a core, it's already stabilized, there's nothing you need to do, you're just buying it as a cash cow, those are going to be generally a little bit lower of an investment. Somewhere maybe between the 10-15%, something like that, because the return is almost exclusively just cash. The next level is a value add, right? So if there's an opportunity, you have a mom and pop and their rents are lower than what market is, or they're not operating the thing very well. If you come in and buy that self-storage facility and then work to fix it up to market rents, usually we'll see those in the area of anywhere between 14 to maybe 18% returns are generally what we like to see. And then lastly, if you're doing a development, a ground up self-storage facility, those returns are usually going to be in the 18 to 22% range is generally what we see there. And note that especially with value add, but especially development, most of your return is coming at the end when you sell, right? Because you're creating value in your investment, and the only way to pull that value out of your investment is either through a refinance or sell or some sort of exit strategy. So it's a lot more back end on the development, but it's usually a lot higher of a return. You got anything else to add on that one, Ken? Ken?
Sorry, I
Oh, you're
put
good.
my mic on mute. So
Oh, no worries.
your return is made up of three things: cash flow, equity buildup, because you're paying down your mortgage, and appreciation in the value of the asset. So those three kind of work in tandem with each other to determine what your return on investment is going to be. And we like to peg the 20% area, but it all depends on where you are on those three.
Yeah, completely agreed. Hopefully that helps give you a little bit of a benchmark as far as that. So back to Henry. Thank you for your questions. How reliable is Radius Plus to determine supply? What tool do you use to determine supply? So,
well, I can take this a little bit, Mike. We haven't used Radius Plus that much. It's kind of a marketing and in-market intelligence type tool, used a lot for mortgage loan offerings and things like that to determine exactly what your supply is. But what we use is we rely more on the feasibility study company to use those tools to determine what the supply is. And the reason we do that is we want to make sure that we have a third party evaluating our market. We tend to get a little emotional on the projects that we're developing, and so we want to make sure that we've got an arm's length situation there. So we generally just rely on the feasibility studies more than trying to do our own approach with Radius Plus.
yeah, like Radius Plus, just to embellish on kind of what Ken said, Radius Plus is a great tool. And there's a bunch of tools out there like that. The thing, and Ken hit it right on the nail. I mean, I personally, I would never really do a self-storage facility without getting a third-party feasibility study. We do our own analysis. We don't use Radius Plus, but we have our own internal methods for how we do our preliminary analysis. But we always confirm that with a third-party feasibility study. So, but like I said, Radius Plus is great. Go ahead, use it, determine your supply. But if you're going to build, I mean, our facilities are usually $8 to $10 million, and we develop new mostly. If you're going to develop a new $10 million, it's worth spending the $5,000 to get the feasibility study. So,
well, not only that, we go out and physically knock on self-storage managers' doors.
yeah,
And
we've done that in the
have
past,
conversation with them and find out exactly where they are in terms of occupancy and supply and demand generators and things like that. So that gives us a real hands-on approach.
Okay, next question. John, how do we access other webinars you have recorded? Good question. So if you go to www.overlandcapitalcorp.com, it's the website that's on the bottom left of your screen currently. Go there and you'll click on the education tab. And from there, you can access all of the previous webinars that we've done. You can access some of the articles that Ken or I have written, things like that. So Go ahead, take that out. You'll see it pops down, webinars, blogs, stuff like that. All right, Henry, do you find value in adding solar to your new/older units?
I
Ken,
can
you want to
take
take
that.
this?
Sure. Uh, we uh, we do primarily new builds, but we add solar to everyone because we're building in markets that are in the West and tend to have good sun. So we like to add solar to it. It's not as much as a cost-effective factor, but it does have a tendency to lower your utility bills. But the SBA on their 504 program uh, will permit you to finance these types of projects up to 5 million under their what's called Go Green program. And if you add solar to your project and can demonstrate that you've reduced the energy consumption by at least 10%, that $5 million limit doesn't limit you to one project. Usually if you have an SBA loan, you're limited to 5 million and that's it. But these are on an individual project basis if you're adding solar. So yeah, we love solar. We like to add them to our new projects. We don't do a lot of retrofits at this stage, but I'm sure if we did, we'd like to add it to that. But it is a little bit more limiting when you're doing renovations because you've got to run all your wiring and everything to make that happen.
So Henry, you got a 2-for-1. You got an answer on solar and you got a financing lesson. So congratulations. Thanks, Ken. That was a great answer. So when you check for demand and supply for a new development project, do you only check for supplies of new units or do you factor in older supplies? The answer is yes. We usually factor in all the supply. So it depends a little bit on what the uses are, but if the use is a self-storage facilities, generally we're factoring all the supply, not just new units.
Well, not only that, you have to check with the local municipalities to see what else is coming online, what's in the pipeline, because you've got to factor that in, and that could be a major factor in determining how much supply there is in the market compared to the demand.
Yeah, absolutely. So Diana, my clients want to do this in their self-directed IRA. I have some that have done this purchasing existing storage units, but do you also see this as a build and sell? Do you believe the return is better on a build and sell than a buy and hold? Diana, thank you for your question. So we've done a lot of self-directed IRAs into these. Both, like I said, we're mostly self-storage developers, so we've done this a decent amount on our self-storage developments. We personally, we do both buy and hold and build and sell. We have some right now that we're buying and holding, and others build and sell. The thing with development and when you do a new project is your returns are usually higher, but you do have to find a way to get that cash out, right? Because you put this money in, the idea is you build it for less than it's worth at the end of the day. So you got to make sure that you can pull that money out somehow, whether that's a refinance, whether that's a sell. You got to do something in order to get investors the return that you first show as an expectation. So generally, there's got to be some sort of cash out mechanism. If your project's doing well enough, hopefully you can do that as a refinance, and everybody loves holding a long-term project. If it means a sell, then you can do that as well.
And most buyers like to see, if you're building new, they like to see the project rent up. They like to see it stabilized for a few years before you turn around and sell or refinance. So
yeah, that's where you get the most value.
Yeah, you'll get a nice pop in value when you do that.
Yeah, exactly. So is 7 to 8 net square feet per person still a good benchmark for supply, or is this location specific? So the 7 to 8 net square feet is a good general broad sweeping benchmark. but each location, I mean, not only each city or market, but each 3 or 5 mile radius is different, right? So you have to make sure that you're doing your research. Like I said, this is when feasibility studies become very helpful, because this is one of the things that they spend a lot of time researching on each market, is what's the demand, the net square feet per person demand.
Yeah, and
So
one of the comments that was made previously, or questions that was asked, is what impact does basements have in the Utah market? And it can have a major impact, which can affect that square feet per person. So you have to take all of that into consideration when you're doing these.
yeah, exactly. So short answer, location specific, 7 to 8, good general broad sweeping benchmark, but it is going to vary by location.
Yeah, and it still is a good benchmark.
Yeah, absolutely. Okay, well, it looks like that is all of the questions. We appreciate everybody taking the time to be with us here today. Like I said, if you haven't taken the poll, please go take the poll. Please visit us on overlandcapitalcorp.com. And we do one of these webinars every single month. So it's on just different commercial real estate investing topics. Love to see you next month. And we appreciate everybody's time. Hope you all have a good day.
Thanks.